Hi everyone, this is Dale Anderson from Fabric Invest. Just released Zoopla's latest rental index. So just wanted to quickly update you on how the UK rental market is performing. So I'm going to share a screen with you, just bring up the report. So this was published on the 8th of September 2021. It looks into the latest insights on the UK rental market based on the Zoopla housing index. It's one of the major portals for property, and they do a lot of market research on both the house prices across the UK as well as rentals. So looking out, there's been a plus 5% annual change in rents. This excludes London, so we are seeing a lot of increased interest in major cities across the UK, including the likes of Manchester and Liverpool. There has been a minus 3.8% annual change in rents in London. So what we're seeing is people are now deciding to possibly live a little bit further outside of London in either the commuter belt regions where they can travel in areas such as Kent, Ashford, where we've just launched a new development there. You can take a train. The train gets you into London within about 37 minutes, or we have another development, Chatham Waters in Kent, again, easy access into the city. So those areas are still seeing growth, but prime London seems to be on the down. There's been overall plus 2.1% annual change in rents in the UK, 32% affordability percentage of salary to cover rent, single earners in the UK, so an average of 32% of your income. It's taking 15 days, that's the average time to let the property in the UK. So market certainly, there's a lot of movement in the market since the rollout of the vaccines and lifting of movement restrictions. So that's had a positive impact on rental movements in the market. It's certainly picking up. There's been a surge in demand for rental properties in August, especially in cities. A widening imbalance between rental demand and supply has pushed rental growth in the UK, excluding London, to the highest level since 2008. Rental growth outside of London is at 5%, up from 2.2% in January, whilst London rentals continue to decline and have bottomed out amid rising demand, reaching minus 3.8%. So rental growth is back in positive territory. Manchester, Leeds, even places like Edinburgh, after falling to negative territory at the start of the year, picking up again. So the market's moving at the fastest rate since 2016. The average time to rent out a property of 15 days. So there's been a sharp rise in demand for rental property, especially in central city markets, signaling a return of city life as offices and other venues and events venues open up, and restaurants, etc. So UK rental growth outside London hits a 13-year high. Average rents across the UK outside London rose by 5%. The biggest increase since the Zoopla index actually began in 2008. So what's driving that? Rents have been pushed up by a resurgence in demand, especially in the UK cities. Over the summer, the economy has started to open up more, as well as universities. People are, the children are back at school, and universities are opening up again. So fantastic news for the student accommodation market, which is looking pretty bleak this time a year ago. It's certainly picking up pace again. So a very strong level of rental growth has not kept pace with earning growth, however, which with the total average of pay up 8.8% on year, according to official figures. So what does that mean for renters? We believe they will be looking at possibly more affordable areas where, a lot of people in the service industry now can work more remotely, and probably don't have to be in the city of London, where rents are going to be extremely expensive. So the Office for National Statistics has warned that earning data has been affected by COVID trends, most notably loss of lower paid jobs, which may be putting due pressure on earnings. So average monthly rent outside London is now £790. So there's been an increase. So this is a chart here that you can see average earnings London, and then UK excluding London. As you can see, there's a big dip there. In London, seems to be tailing back, but steady growth in other regions. So rental growth hits a 10-year high in the East Midlands, plus 6.8%, the Northeast 6.5%, and the Southwest at plus 7.6%, Wales at plus 6.4%, and then Yorkshire and the Humber. Meanwhile, rental growth in some cities and towns rose even further, with rental growth in Wigan and Mansfield reaching double figures at 10%. So even places like Blackburn, Barnsley, and Norwich, more tertiary areas are seeing some good growth in rental rates. So city life is resuming. The surge in demand has pushed rental growth back into positive territory, plus 10.5%. Average in certain areas as office, bars, restaurants, galleries, and theatres are reopening. People are starting to move again and socialise, and things are getting back to some sort of normality, hopefully. Rental demand has risen and pushed rents up. Average rents in Manchester have risen by 1.4% in the last 3 months alone. Birmingham as well, 2.5, and Leeds up 1.9, Edinburgh at 2.2. So a swing back of the pendulum discussed in the previous reports, with renters returning to city life, as we said they would, after the COVID had seen the worst of it, and vaccines have been rolled out. So same trends even more apparent in central London, sharp rise in demand. Average rents in 12 boroughs did rise by 2.3%. But as a whole, rentals have bottomed out in your prime London markets. Demand not being matched by supply in a year-to-date, rental demand is up 19% compared to last year, while the total stock of rental properties down 13%. So yeah, you can see a chart which shows the change in demand and supply year-to-date. Demand let's been agreed, and then flow of new supply to the market, and stock of homes to let being in negative territory. So examining August data in more detail shows a scale of stock erosion, which has been further fueled by pickup in demand. So the total stock of homes available to rent across the UK is 30% lower compared to normal levels for this time of the year. So while investment activity, received a slip over the last 12 months, as referred to in our house price index, which I touched based on in the last video. Due to stamp duty holiday, there's shown signs of slowing. As stamp duty holiday comes to an end, delivery of build-to-rent homes built and operational by large institutional investors is on a strong upward trajectory. Now, just to touch on that, if you read the news, Lloyds Bank have just committed to millions of pounds investments into a residential arm. They will become one of the largest landlords in the country. So they've obviously seen it's a good time to invest in bricks and mortar, as the banks are printing more money. There's quantitative easing, devaluing of currency, along with inflation. Where do you put your money, which is going to be safe and secure over the short to medium to long term? So the delivery of built-to-rent homes built and operated by large institutional investors is on a strong upward trajectory, and Scotland and other areas also seem to be on the increase in terms of institutional landlords looking for good deals. They're going to get yields, and they know that there's also going to be some good scope for potential growth. So when you've got the likes of Lloyds coming in, that's like Warren Buffett buying stocks or shares or property. That they've done their due diligence, and they are now focused on building a residential portfolio. So market's picking up speed, and the average time between listing, as I mentioned, is now 15 days. This is a graph just showing properties being rented nearly a week faster than July 2020. Places such as Hastings, Worthing, Bournemouth, and Plymouth, average lets being agreed in just over weeks. And markets in large cities, the fastest moving are Liverpool, Cardiff, York, Bristol, Newcastle, Manchester. Most of our buildings are fully occupied. The ones that we offer that are currently, some of them that are completed, we're seeing very good occupancy levels. So outlook, strong levels of rental demand seen during August, moderate in line of seasonal trends, but overall demand for rental property is likely to remain higher than usual in the coming months amid a swing back to the city life. As ever, much will be dependent on the extent which the current rules around COVID continue as they are, but so far things seem to be a lot more positive than they were looking a few months ago. So that is certainly putting the demand for rental homes and people moving to different areas is putting pressure on the rents at the moment. So yeah, this is just a map showing you certain areas. Nottingham's had the highest growth, followed by Newcastle, Bristol, Sheffield, and Liverpool. And then we've got a map here showing you those areas. So there you can see in the northwest, 4.2% change, East Midlands 6.8%, the southwest 7.6%, but then London slightly lower than what it was before. So certainly areas to look out for buy-to-let investors would be these regional cities outside of London. If you're looking for passive income and yields and cash flow positive investment, places like Liverpool, Manchester, these are areas we'd certainly look at, and areas around London such as Kent. So that's the rental market index here. So we're always available to provide all this due diligence and market research. If you just make an inquiry with us, we'll be more than happy to help. We will be running a webinar very soon, so that'll be announced, and that'll be how to plan and retire for property investment, retire early through property investment. We're going to be sharing some tips and secrets that myself and some of the other directors have used to build a portfolio of properties ourselves over the years. So really look forward to that. And we hope you enjoyed the information shared. And we'll keep them coming. All the best. Thank you very much. Take care.